Monday, wonderful week. How are you today? Please give me some okay that you can hear me. How was your weekend, guys? Wonderful. Thank you very much. Well, it was a great weekend here. Thank you for asking. Some nature time, fresh air, family. Can't ask for more. Pretty much amazing. Yeah, definitely. Congratulations to Toronto for making the finals. For the first time ever, Canadian team in the NBA finals. It's going to be excited starting from Thursday. All right, guys, so I hope you had a good time. For all those of you who are watching the live room for the first time, welcome to our family. Quick reminder, inside the members area, I do suggest to watch the video tour so you understand how you use the members area in your favor. And this is the trading report, which is coming a bit later after the live trading room. The report is a quick summary of all the things that we discussed in the live trading room and briefly a reminder of the ideas. In the report, you can find a video of how to use the trading report and must watch if you are new to all that. Below, you have a table of the most important videos, recorded webinars of all the terms we talk about in our live trading rooms. Watch them at your pace so you understand what do we do and how. Below you have a table. This table, you click on the images, it opens the images for you, showing you what we are looking to trade, the directions, and so on. And of course, the explanation is below the table. You have here basically a short explanation of all the things that you see on the chart, explained here, and of course covered in the live trading room itself. All right, so let's begin. We have a pretty heavy list of the things we started to follow from previous week, getting more and more interesting as the week begins. Yesterday was quiet day due to the banks holidays in the US and the UK. Today it's catching up. So let's start with the European pairs. The euro versus the dollar is the first one. And let's take a look, what do we have here. So first of all, we are facing this double cycle level. Just try to draw it here. This is a double cycle level, 61.8 Fibonacci bullish divergence. So far, so good. As long as the bottom holds, as per the cycle, the idea is bullish. Divergence ticked up, looks good. Daily chart never yet created turnaround, meaning we never broke a trend line. We never created any higher highs. A bit of suspicious sign by itself. So by ideal, of course, we do want, for more conservative, we do want to break the trend line, or more conservative, get the higher highs. As for now, none. However, we do have the divergence also in play, and we do have a false breakout completed, and we have two candles reversal rule, which is basically with the false breakout, with the divergence on cycle level, we got an engulfing and one more green candle, which we call a verification candle, which closed above the previous, the engulfing high. So the technical signs are there. Now we should be possibly looking for setups. So what do we have on the lower time frame? 4-hour chart completed a false breakout with the divergence and basically started to create higher highs, meaning looking to buy retraces is pretty much a good technical idea. We have a retrace, we are building up a possible bullish hidden divergence, so that becomes like a very possible bullish area. Now the 1-hour chart creates the two waves retrace, and if the 4-hour chart makes a bullish hidden divergence, 1-hour chart to be a corrective cycle, which it does, two waves break above this trend line, should be a possible beginning for the next rally. Remember, this is more aggressive. Why? Because the daily never yet, as for now, created, not trendline breakout, not higher highs. So we are speaking here about a shorter term approach, which means it's more aggressive by itself. Is it still technically correct? The answer is yes. Now, one thing to pay attention to, and that's the warning sign, which I always mention. What happens if we go one straight leg below the 61.8? This, if that happens, is a bad sign. One straight leg after a massive rally, one straight leg to the opposite direction below all, crossing all the Fibonacci levels, is a warning sign. If we will face it, it would be time to abandon the bullish idea and look for clearer signs. The reason is, if we assume that the market has bullish signs and bullish reasons, then acceptable retraces are first of all in corrective mode, meaning two waves or range. Second, they should not cross in one straight move below the Fibonacci levels. The acceptable Fibonacci retraces levels are 38 down to 61.8, 38.2 down to 61.8. One straight move below is not something we would want to accept. So pay attention to that. And as long as it didn't happen, the view is look for the retraces and the buys. That's for the euro versus the dollar. The euro versus the pound, on the shorter view, this is what we are basically looking to see from the pair. We have a Bollinger Bands move from one band to another with 50% deviation. Clearance zone activated right here. What's a clearance zone? A zone where a lot of traders locating their stop loss levels. We call them the early sellers, those who started to sell here, 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 right? They protect very short-term stop losses. Most of the time, the market is trying to catch it, these levels. In this case, it did. On the lower time frame, we don't have a clear cycle here. We have one straight rally. This is pretty much what we are facing. Each of the legs does show a cycle movement on the lower time frame, so we definitely accept retraces from anything in between 088 to 089, which are these levels. Anything in between this area is an area to start and provide some short-term retraces. Once they happen, and they can happen in any of the two options. Option number one, two waves correction. Option number two, some kind of a range here. After that happens, I would expect one more push, so the daily can go and create a divergence by itself. So some sells, so the rallies is our short-term plan here at that stage. Next one, euro versus the Kiwi, going good so far. And I remind you, this is our massive low that we want to see, going and breaking below. That would be a good verification that we are building up some serious correction. Quick reminder where it all derives from: the daily double cycle, bearish divergence, we have the 4-hour chart making also cycle by itself on each of the daily legs. Okay, and so on. So we also start to see here some kind of lower highs, lower low structures, which is good. The idea is looking for sells, and the bearish view remains on. We do need to pay attention to the developing bullish hidden divergence from the daily. And I say developing because, first of all, we don't have a new low yet, official low. so it can go and go and go. Second, 4-hour chart must complete a corrective cycle in that case, and it's pretty much far away from that. Therefore, the view was and remains bearish. Euro versus the Kiwi, we are after sells. Our invalidation is the last stop. Euro versus the Aussie, pretty much same story. We were after sells. It starts from the short term. It might be developed as a long term, and I will explain. According to the weekly chart, we are for long-term sells. Could be done this way, could be measured this way. It doesn't change nothing. The view remains the same. Meaning we are after sell the rallies. We expect two waves, correction down to 50% Fibonacci after triple cycle, or stay inside the range. This or other way around, we are after sell the rallies. Daily must fit in. The problem with this daily that after it broke this range, it never recreated any divergence here. That's the only case here. Now, it could still be easily expanded megaphone before the turn around for the bigger view, making this double movement. Now, can we judge this at that moment? Will it do straight move down, or will it try to do anything like that? First of all, at that moment, it's impossible to judge. And that's why I mentioned in the beginning, it starts from the short term, and if it goes straight, it will develop as a longer term view. As for now, it's impossible to judge because both scenarios are completely acceptable as for now. Straight move down or one more high for divergence and then move down. Complete 50-50. Therefore, our view remains bearish as for now for the short term. I remind you, we are bearish from the false breakouts from previous week and after we got the convergence. Our plan was sell the rallies. We got this, got the breakout, right? We got this hold. The idea was looking for the sells, and that could happen right from here or with one more false breakout. The idea was bearish, looking for sells and sells only. This idea remains still relevant. According to the way the daily develops and the 4-hour chart also develops, we could accept completely here double cycle. We could stay inside the range for some time. It doesn't change the plan. It's just the ways that we can accept the pairs to move based on, right? To follow the technical view. Corrective cycle is a two waves movement or a ranging movement. So your Aussie also remains bearish for us. Now here comes the one that I've been asked a lot about, the euro versus the CAD. Now look guys, it's here is what just want to remind you. What do we trade here? We trade the long-term sells. Triple cycle, we expect two waves retrace. Okay, that's for the longer term view. Weekly should fit in, and weekly definitely does fit in. First leg down was a triple cycle, then a corrective cycle as a range. So far, so good. Every rally we want to go into sell it, right? We got the rallies, then we got the triangle. First breakout was fake, as you can see, immediate retrace. It does not change, however, the plan. Now look what happens here. This is a very critical scenario. Okay, here's what we see. We got a triple cycle, which is a very good bearish structure. Two waves retrace is acceptable scenario as well, and this is what we are facing right now. And the pair is still respecting the 61.8. Remember what I mentioned in the beginning? If we cross through 61.8 in one leg, that's your suspicious sign. Now we try to spike in one candle here. Never managed to close and hold above the 61.8. Therefore, it still holds. There is also bearish divergence developing here, meaning as long as it holds, bearish move could go and really start itself. So if we manage to go and start to create the lower highs and the lower lows here, this is a very good sign for continuation for the euro versus the CAD. If we cross the 61.8 and hold above, abandon the bearish view and the sell idea. In that case, there is very likely scenario that the daily is going for a deeper correction before further sells will take place. Okay, so that's for the euro CAD. Bearish it was, bearish it remains. However, be careful with the 61.8 level. Of course, watch for the trendline breakout and lower lows to continue and be created. Why? Because that's what defines a bearish trend for us. Lower highs, lower lows. Once it's back in the game, we remain bearish. And the euro versus the franc, we wanted to see some signs for a reversal close to the bottom of the range. Nothing more than that for longer view as for now, only short term. Okay, so we got it. We got this push. Divergence came in play. Each of these legs turned to be a cycle by itself on the lower time frame. Divergence is beautifully in play. So corrective cycle is definitely the acceptable mode here. Euro franc short term bullish, invalidation is right here. Pretty simple. So buy drops, dips down is the main idea here. Any question of the European pairs, guys? So that's again the interesting ones I see from all this. As for now, developing Euro Aussie, Euro Kiwi. Euro dollar is the main hot watch list together with the Euro pound. And the second ones, the last one on the list, Euro franc and the Euro CAD, the last one on the list of the euros. No questions. Perfect. Let's move on then. Couple of pairs I see on the pound. That's actually we have three pairs here: pound Aussie, pound franc, pound yen. Let's go. Pound Aussie. We started our bearish view from the previous week. The idea is very simple. We are trading the weekly. Let me just change the time frame. Weekly bearish divergence at the end of the cycle. Bearish divergence, so we expect a corrective cycle. Daily triple cycle by itself on the last weekly leg. So far, so good. Bearish divergence. So we can definitely expect two waves or continue to play inside the range. Both scenarios are totally acceptable. Now, the sales were very, very good. They still are running. No reversal signs. We do have this low clean, which is good. And we are coming very close to the last trend line zone. Also psychological area 180 to 50. 250 points, round points. This is a place where we could start to see some kind of corrections. Of course, we would want to see turnaround, false breakouts and higher highs. At that moment, we have false breakouts. We never got higher highs. Why do we want to see the higher highs? Because corrections currently would be against the main time frame, weekly and daily, right? So when we trade against, we definitely want to see false breakouts first of all, and then higher highs, or at least the turnaround by higher highs, higher lows creation, triple of them. Happened, good, we can work with that. Didn't happen, we can't. As for now, the view remains bearish. Again, short-term retraces would be acceptable once higher highs start to be created, but the view still sell the rallies. For all those of you who are involved from the previous sells, the long-term sells we experienced, nothing to do, just keep your management, which means trail the profits and the stop losses. Guarantee that in a beautiful winner you don't turn to a loser by any random move from the market. So pound Aussie bearish. Pound franc, our expectations pretty much, let's start from the long term. Okay, according to the long term, I'm after the buys, as you know, triple, double, that's my expectations for the long term. But for the weekly, to continue the movement, daily should be in a play. Now the daily is a bit tricky here. The reason for it to be tricky is it had one straight move. It does not provide two waves. That would be the ideal scenario. On the other hand, it does have a bullish hidden divergence. So what do we do in that case? Are we jumping for long term, or are we still facing the possibility for two waves? The answer is it's completely 50-50 in this case. Also, watch for the retrace. One straight leg right to 61.8, trying to cross below but never holds below. So the bulls are still there. Will that be enough or not? Currently, this is a very possible scenario, the one I personally expect to happen. But on the same side, you easily start to climb all the way and continue the bullish trend. So when it's not clear, we start from short term. Long term currently does not have all the approvals for us. Let's talk about it on the short term then. And the short term view, that's kind of the movement we have. The divergence came in play. Last trend line is broken, no higher highs in play. So we definitely are okay to start going up to the Fibos. And we have several important levels on the way. 23.6 is the short-term view for one reason. If it will not manage to break it, that's what we expect from the daily, the two waves, and then the bigger view rally. So that's pretty much for the pound franc short-term bullish. Then we will see how it behaves around the Fibo levels. Are we going for one more move down? That's what I personally expect. Or if we cross through in one straight leg, then the long term would be activated. At that moment, it's short term and it's bullish. And the same last thing is for the pound yen. Now, we do not have any cycles in play from the higher time frames. Therefore, what we work with here is only the short-term cycle. Nothing again in play from the daily and weekly, so we work with the short-term view. This, sorry, let's enlarge it a bit. This is a bullish hidden divergence. Started right here. Now turns to be a bit of a continuing, meaning some short-term bullish pressure comes in play. On the 4-hour chart, we have triple descending cycle, which starts to show a false breakout. So the way I see that, and the fact that we are very close to the psychological area 137.50, I would expect the pound versus the yen provide some buy opportunity. Since we don't have any clear cycles in play, what we want to create is false breakouts and higher highs. right? Or at least we want to see some turnaround, making higher highs, higher lows. Then we can discuss about buy the retraces. So that's what I want to see from the 1 hour chart. This to happen, then we can talk about the sell the rallies. It didn't happen yet, so have your eyes on it and have some patience. It might take a day, it might take two. The levels are good for the short term. The cycle is good for the short term. And the way I see that, this should be the very possible next movement for this pair. Among the pound yen is my last favorite, but still, as per the short-term view, again, nothing for the long-term here in play. As per the short-term view, it looks correct. We need to see though the reversal signs, and that's false breakout and higher highs, or higher highs, higher low structure, triple of them, and then buy retraces. Okay. By the way, going back for a second for the euro versus the kiwi. This is the structure on creation. Okay, that could be the triple. So that every double to happen with the breakouts, or any range to happen, because range is also corrective cycle, is the one that you won't want to pay attention to. Same with the pound yen. Okay, that's what you want to see: triple, double, if you can get false breaks and higher highs. So that's for the pounds. And now we're moving to the Pacifics. Aussie dollar and Aussie Kiwi are the main two. Let's start with the Aussie Kiwi. We are bullish for the long term. Reason is this: we are now in corrective cycle, right on the bottom of this range. The plan is bullish. Weekly was against us with bearish hidden divergence a few weeks ago, so we wanted to see the daily making corrective cycle. Assuming it's over here with the bullish divergence, plan remains bullish. If we see new low, it does not change the plan. We will just be waiting for the next divergence to form. And according to the long-term view, we are still bullish. So Aussie Kiwi, we are after the buys. Aussie versus the dollar. Now this one is tricky, and here is why. According to the long view, we're still at the bottom of the special cycle. False break in play, divergence in play, and the last massive candle 4 months ago is still bullish. We never got any higher high since. And look what happens on that place. Straight move right to 61.8. Kind of suspicious. That's why at that moment I hold my long-term view on the neutral. The bullish view I had is irrelevant any longer due to the deep retrace. What's going to happen for the longer term from here, time will judge. As for now, there is no way to make any conclusion and any decision. Therefore, it's irrelevant. On the shorter view, daily has a drop down, bullish divergence came in play, 20 candles right on the Bollingers in play. The expectations are for correction. Correction could be two waves. Correction could be a ranging structure. This or other way around, the short term is bullish. Keep in mind it's also breaking here the highs to start and create the higher high structure. It looks good. So that's the view for the Aussie dollar on the short term. And that's the Australians. New Zealandians, New Zealandian dollar. Here we are. New Zealandian, where is it? Here. New Zealandian dollar. We don't have long-term cycles completed and in play at that moment. So the view here is still short-term, pretty much like with the Aussie dollar. Triple cycle, bullish divergence, 20 candles right on the Bollingers. Okay, 20 candles right without going to the middle. Engulfing, psychological level 065 in a hold, and beautiful engulfing pattern with one more verification candle. That's a bullish sign. This is a could be broken into triple, could be broken more correctly into double, and that's personally the one I see that. Each of these legs, what's this noise coming from outside? Each of these legs is a cycle by itself on the lower time frame with bullish divergences. Therefore, we are good for corrections. Corrections could happen in 2 waves. Corrections could happen in a range. So the way I see that, definitely possible scenario. And of course, it could just develop some kind of a ranging structure here. This other way around, the short-term view is retraces and buys. Now this pair also fits in. Just 1 second, guys. Excuse me. Guys, 2 minutes break because they're cleaning here on the outside on the street, the sewers or whatever the name is. So 2 minutes. The noise is when it's gone, I'm back. Okay, 2 minutes. Okay, I hope it's better a bit. They move to the next houses on the street. All right, New Zealand and Canadian is the next one. What do we have on the New Zealand and CAD? Pretty much same story, but here we split it into 2, short term and long term. So according to the long term, we are bearish due to the triple double cycle, massive false breakout, divergence, engulfing, everything looks good. So our expectations are for a long-term sell continuation. But the short term is against the long term. The reason for that is the double cycle, the bullish divergence, the psychological level hold of 0.8750, a bit below, but a hold, and the expectations for the corrections. Correction could be into waves, correction could be in some kind of a range. Once the correction is over, I expect here some bullish some bearish hidden divergence, and then trend continuation. So this is the way I see that. On previous week, our expectation was triple double. Here is a triple, here is a double, here is the rally. I expect this to build second leg right now, and the 4-hour chart to develop itself this way. So the short-term view is bullish, looking for buy retraces. At the end of that, this scenario is very possible. New Zealand CAD short term bullish. Questions for now before I move to the next instruments? Any questions at this stage, guys? Perfecto. Next, let's Aussie Frank Stefan. I don't have a personal view, to be honest. I think we are into corrective cycle short term, but nothing I can judge for the long term. I think we are, again, on the short term view, this is pretty much the way I see that. Back to the Fibos somewhere, or at least to hold this range. So short-term bullish, can't say anything about the longer term. Sorry. Swissian, I don't know, Michael. I don't have a view there. No clue, honestly. Been trying to analyze this one, no idea. Next one on my list, dollar yen. So we've been bearish for a while on this one, and the bearish view remains. 50% still has a target to go. Weekly, the last divergence is still bearish. This one, bearish hidden. No real signs against us. Short-term retraces are possible, of course, but our plan is still or sell continuation. And that's pretty much it for dollar yen. Nothing more to say. Again, short-term rallies could happen, no problem. We will use them as sell continuation. As for now, the view remains bearish. Now, dollar franc is a pair we have been riding beautifully previous week into the sells, and look what happens here. The two waves are in play. The bullish divergence come in play. We are making a false breakout on this trend line, which is a warning sign. I must say I don't like the way the dollar franc is developing. According to the weekly cycles and divergences, we would expect clearer, deeper two waves from the daily. We did have the two waves, but they are not clear. First of all, it's not a cycle by itself on the lower time frame, so kind of not clear to me at that moment. The way I suspect it's going to behave is something like that. Triple, double, and then bigger leg. But currently, not clear to me. As per the cycles, therefore, as for now, I move neutral on the dollar franc. The previous week did its work, did its job, paid, and basically with the divergence from daily and 4-hour against us, game over. And now we're neutral, waiting for the next signs. And this is from the Forex view. Now moving to commodities and the other instruments. So while the gold and silver are still neutral, and I personally don't see anything interesting there, the oil, which was our one of the best trades previous week, let's see where do we head with this one. So the last divergence from weekly is still bearish hidden, right? We expect a daily corrective cycle. Now we do have a daily corrective cycle. We don't really have the official target reached. So we have the 38.2 of this, but if it's a triple cycle, we are good all the way down to 50. And the way that the divergence is developing here and the fact that we are stuck within one candle is still a bearish view for the oil. So personally, I think still bearish, and I will be enjoying the 4-hour chart as an opportunity to provide us the next sells. So for me, oil is was and remains bearish. And for all those who missed the move from the previous week, this rally should provide the opportunity to go and enjoy the next sell. And for all those of you who are riding the move down, then remember, signs against you, slow down, end targets, clearance zone. Never let a winner turn to be a loser, especially when we're speaking about good risk rewards in the pocket. You have it, you managed it. Management could apply to anything. It could be partial cash out, full cash out, and enter with the next opportunities. It could be trail the stop losses. It could be just move to break even. It could be a combination of any two, but the management has to be done once the market shows signs against you. You don't want to rely on face when it comes to trading. You want to rely on facts. So that's basically the only interesting commodity as for now. As per indices, the DAX, we have a bearish hidden divergence from the weekly. The daily is trying to cross below on the bigger trend line. The last one was already closed a long time ago, but the main factor here is that we start to see the lower lows. So the view is at least two waves which might go and develop for longer run sells later on. Can't judge that yet as for now, therefore the bearish view is back, expecting two waves and maybe the beginning of a deeper drop. As per Nasdaq and the Americans, I mentioned in the weekly forecast, I'm waiting for the months to finish. If this is going to be a false breakout with this divergence, that's a great sign that we might be ready for a massive reversal. Still early to judge. The month is not over yet. And we have the stocks in play and cryptos. So we have the one invest, which is the Deutsche Bank. Nothing is changed there. And there is one more that we added to the list previous week. This is the Louis Vuitton, which now is making the two waves retrace, right? Break below, and we are expecting the second leg to develop. So trend line, we want to see the break of the trend line right here, and we are back into the sells. Cryptos, we have couple from the previous week. We had our Ripple and Ethereum versus the Bitcoin. View was looking for the buys as the trend line holds. So let's take a look, where do we stand. This is pretty much what we're facing here, right? So far, so good, looks okay. And the Ripple, XRP USD, our view was also bullish, right? After the convergence, higher highs. So looking for any good setup and buys. So here we are. The two waves came in play. The breakout. So far, so good. Right, well, just draw it correctly, of course. The last trend line was the last divergence. So far, so good. No change. The view remains bullish. I wouldn't expose too much on the cryptos. That's technically the most interesting ones we have on the list. So far, so good for both, and that's pretty much it. So, guys, what is the long-term target for XRP? That's a good question, Velislav. For me, the moon. But honestly, I don't think it will be fair to set any targets here. I don't treat crypto as an official financial market yet. Definitely, it's the let's say the next big possibility to become an official market, but it doesn't have anything yet that you can rely on. Technical analysis is a way that analyze crowd psychology mainly, right? Price historical movement. Crypto is so young and almost no money is involved compared to all the rest of the financial markets. So to rely on too much on historical levels and so on, I don't know how smart it is. Personally, I believe it has all the reasons, fundamental reasons, right, as per the company, to be traded above the level of 1 for the longer term, 0.5 for the shorter term. So this is pretty much how I see that. Technically, I don't know if it's really fair to set targets here. As per the cycles, again, historically we have this high, right? So we know that later or sooner or later these highs might be tried and be broken. Would you have enough patience, or me to have enough patience to hold until then? We will see. So guys, this is what we have for this week. Definitely a lot of interesting opportunities, and that's pretty much it. Thank you very much for being here. I wish you a wonderful trading week. Willem, gold and silver, as I said, I am neutral there. I see nothing, really. I don't know. Looking for the buys, but I don't see a reason for that. So sitting, waiting. That's pretty much it. Once they become interesting, they will be on the list. Thank you guys. I'll see you in the Telegram channels, and tomorrow Jordan is with you. Have a wonderful evening. Bye for now.